Good morning, traders. It is Monday, the 14th of August, 2017. It's 8:04 a.m. in downtown Chicago. Thanks for joining me again. Hope you had a safe and fun weekend. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance this morning, the market is bullish, heading higher this morning. We have a gap up into the sell-off day on Thursday. You may have noticed that the sell-offs are occurring on Thursdays. That's becoming, according to a study I did last night, Thursdays catching up to Tuesday as the day with the most likely range and opportunities. Right now, the leader on the board that I watch is the Euro Stocks 50, up 43 points at 1.27%, followed by the DAX, which is up 147.5 points at 1.23%. In the U.S. markets, the Russell is leading the pack. The Russell is up 9.6 points, trading at 1,381.7, and that represents almost three-quarters of a point uh, up on the day from Friday's close. The laggard today is crude oil. Crude oil is down at 48.54, trading down 27 cents or 0.55%. It looks like gold is lower, and the safety assets are lower as well. The Euro Bund, the Treasury bond, and the U.S. 10-year note are slightly lower this morning. As far as the news flow overnight, now there was a lot of jitters going into the weekend with the Trump versus or the U.S. versus North Korea issue. But it turned out that on Friday afternoon, it turned out that actually there have been back channel conversations going on for quite some time between the North Korean government and the current administration. So the market came off the bottoms a little bit and is pricing in more stability. This morning at 4:20 a.m. Central, 5:20 Eastern, OPEC data came out reporting that Saudi Arabia showed compliance at 99%, with Iraq complying at 43%. With the quota for each country. So even though these OPEC countries, keep meeting and placing quotas to limit supply so as to push prices higher, as we've seen the oil pop up pretty quick from the 43, 44 area into the 50s. Some of the countries in there are not complying to that quota, so supply ultimately is not affected as much as it should be. Other than that, for those of you who've been following crypto, Bitcoin hit $42.15 this morning. It's up 17% since Friday's close. Just absolute insanity over there. It's like the tulip bubble. And that's about it. Since it's Monday, I'll go real quick over what we're expecting. As far as today, we're looking for really nothing on the calendar today. Very, very quiet trade expected. But Tuesday, we're getting German GDP, UK CPI, PPI, RPI, and then in the US, we get retail sales, advanced import prices, Empire manufacturing and business inventories. On Wednesday, we get the FOMC minutes, which is likely to be a mover. The UK will have ILO and employment, the Eurozone will have GDP, and the US will have housing starts and building permits. So there's a lot packed into Wednesday. On Thursday, we're looking for UK retail sales, Eurozone CPI, and trade balance. We're getting the jobless claims number, Philly Fed, industrial production, and leading index. Of course, Wednesday we also get the crude oil inventories. I did not say that. For Thursday, we get the ECB meeting minutes and Fed's Kaplan. Friday's fairly light, German PPI, Eurozone construction output, and current account and Fed's Kaplan. So the bulk of what's happening this week is likely to be Wednesday, Thursday, the heaviest, with Tuesday following that. Today's the lightest day, and Friday's mediocre. While I'm at this, while I'm looking at this, I want to make sure that you all know that starting Wednesday through the 25th, there will not be a live Trader Bite. It's time for me to take some trips, and I will not be here to do a live Trader Bite. Hopefully, you'll come back on the 28th, refreshed as I intend to be, to resume our program of going over the market every morning and hoping everybody is using it to dial into the current action and context and to tune in their plan for the day. So again, from this Wednesday onwards until the 25th, there will not be a live Trader Bite in the morning. I will be gone, and then that will resume on August 28th. Okay? Now, let's take a quick look at what we expected on Friday. Friday, we were looking based on the overnight stance. We were looking for responsive buying early on. As soon as the market's done with its early consolidation, we're looking for the bigger moves to be upwards. And I was looking for the market to recover back into the 24.49, 24.50 area and to hold that area steady. This did not happen. The market did recover a little bit, but it did not quite get to as high as I had expected. Secondary hypothesis, immediate push through the low volume node right here into the high volume node, which is if you recall, Friday I went through the process of the auction, and then I was looking for initial resistance there for the market to turn, but I also expected a continuation of this move leg down, so I was looking for it to test the lows. That didn't quite happen either. Friday was a combination of a little bit of hypo 1, a little bit of hypo 2. We got the run up at the beginning. We got the test lower. We could not breach the low. Remember, the dark green line as the prior day's high or low. And then we pushed into the 46.50. Couldn't quite get to the 48 that was designated up here. 46.50 to breach the initial balance high. The market traded in a balanced method, in a balanced approach throughout the afternoon. An impulse down, 7.25, looking for a continuation and a break of IB low. So once we got this impulse down in the afternoon, pull back to mid for a continuation. And once we got to double IB low, this is a double IB low stat here. I was looking for the break lower and a test below. Finally below Thursday's low, and that didn't happen. The market just didn't have it in it. It just traded sideways, and then it ended up moving the point of control to below the middle of the range. So what we ended up with is a fairly balanced profile. The value area is clear and is on point here. So we're going to be using that value area today if the market gets back into the range. Here's where what we did on the overnight. The overnight, as soon as we opened, a slight gap up, and as soon as we opened, we took a strong push higher, and then we've traded sideways throughout the Asian session, where we expected the action to actually take place, since it's an Asian crisis. Then the Europeans kicked in, and the European market has been pretty strong, immediately pushing through to the upside and then holding sideways, completely dead sideways for most of the session. You're talking about 24.5250 to 24.5550, or even 24.55, 2.5 points from about 2:30 a.m. Central, 3:30 Eastern until now. Just absolutely, completely dead. The volume is higher than what we would consider to be common. We're looking for 140 to 150 or 135 to about 150,000. It's trading at 211,000. So there's a bit of volume here, but the market hasn't really done much of anything at once it rallied on the European Open. Okay, so very quiet. I'm expecting this to be a fairly quiet session. Don't get too caught up in the early action. So overall, we're looking for the market start recovering. So today is what starts a new composite, and that composite is going to take the the day that started to move with the high, and then we start to look at the profile. This profile here tells me that this low is horrendous. This low is just not strong. We did not see an excess low there. However, the move was on news, and that could happen, but we did not see a market that has traded, and then immediately got rejected. When we see immediate rejection, it means that the low is excess, is an unfair low, and an unfair low means that there's an opportunity for buyers to buy it at a cheap price relative to what value is perceived to be. And for that to happen, the market tends to make a trending type profile, and then it tends to make a very thin bottom, right? A very thin bottom. This tells us that down here there was very little interest by sellers to continue to sell. Buyers step in, take prices back up, and quickly move them higher into the next balance zone, which to us was this 48 area. And so that's what I was looking for on Friday, a quick push up into the 48. And instead, what we have is a profile that looks like this, where we did have somewhat of a trendy profile, but then we have a very blunt low, which means there's a lot of volume occurring at this low. And if there's a lot of volume occurring at this low, it's not really an unfair low. Again, by definition, an unfair low would be where people just do not trade. There will be very little trade scarcity there, right? So that's a bit of a concern. But looking at the overall profile, there's not really a clear. So we've had a multi-day trend down since Tuesday. There's not clear consensus on pricing. I expect that this will be tested again at some point this week, tomorrow or Wednesday. Again, I will not be here from Wednesday onwards, but it may be tested on tomorrow or Wednesday, and for that, you just need to be careful on the long side. I think the shorts are likely to be squeezed at this point. We've seen this movie before, where news pushes us down, and then we slowly drift up and squeeze, and those shorts are part of what fuels the move up. Also, we left a double bottom on Friday. That's another sign of a weak low. The double bottom was just a tick above Thursday's low. That's another concern to me. This is likely to start moving into the gap at some point soon. That's how the auction normally advances. For today, I'm looking for an open auction that is absolutely quiet. I'm looking for an attempt at a rotation down. I'm looking for a gap zone to be formed. It's not likely to push into this 45, 46 area. And I'm looking for it to be very, very quiet. Today, expect around 8 points of range. That would be your hypo 1. I'd love to see volatility, right? I'd love to see it move around, but I'm not expecting much. I'm not expecting it to breach lower, and I'm not expecting it to make a fast move higher either. It's likely to be pretty much sideways. Now, if we open and we have an open auction and we quickly push up and we return to the opening swing and then start to rotate up, then the gap zone will be higher. We'll have a bigger gap zone, and we'll have some pretty motivated buyers to take us back above the 2460 area. 2460 represents the low volume node on the composite. This is an area where the market has not traded very well, going way back. Okay, so this is the cutoff point from one composite to another. So I expect it to battle this area a little bit, and then just sit sideways. But you're looking for an updrift on Hypo 2 as well, in a grinding format. If you're going to get short today, what does that mean to you as a trader? If you're going to get short today, keep them light and tight. And look for the market to fail back into the range before you get aggressive with the short side. That's what this particular context is telling us. Now, don't kid yourself. Just knowing that, it goes a long way towards preserving you as a trader and keeping you on the right side of the market. Just knowing when not to trade is an edge in and of itself. Believe me, a lot of people just look for something, anything to trade, and they end up getting spun by the market and caught up in the noise. Don't do that. So formulate your plan and then start to look for clues and then only trade when you see a clear edge. Again, I want to remind you, no trader bite Wednesday onwards. There's one tomorrow, but nothing from Wednesday until the 25th. I will not be around, but I'll be posting older videos, rebroadcasts that you can watch, some important videos that you might want to take a look at. Good luck, and I'll catch you tomorrow morning. Take care.